Ready to get the inside scoop on equity funding? Tune into TDJ Equity Funding Insiders Podcast for an in-depth look at what it takes to access financial capital and maximize your investments. Hear from experienced professionals, including bankers, underwriters, loan officers, and industry experts as they share their unfiltered stories and valuable lessons on securing funds.
Hello, everyone. We want to thank you all for coming into our Giving Power to the Business Owner webinar series. And today we have a special guest that have come in to us, Miss Kimberly Evans. Miss Kimberly Evans, Kimberly Nicole Evans, she is a transitionist that works with people, helping you to make that transition from an employee to probably your own business, or from management upward to C-suite management. And she helps you to kind of work that process out. So we wanted to bring her in today where she can talk to our business owners and a lot of our real estate investors. A lot of people are starting this journey for the first time, and they don't really know what to do, and they're going with so much of what the internet says. So bringing somebody in that's a professional that can actually give them some guidance is something we want. But what she also is going to do is she's giving us a bonus. And the bonus is that, guys, she's going to talk to us about raising capital. The stories we have heard as loan brokers. So we are very, very happy to have her here to give us some great knowledge of what she has. So if you would, let's welcome her. I want to thank you so much for Miss Kimberly for being on our show today.
Thank you. Thank you. Jackie, thank you so much for having me on the show. It is always such a blessing to be able to speak to fellow entrepreneurs and even those individuals who are contemplating entrepreneurship, right? It is not the easiest decision and choice to make in life. And so I welcome the opportunity to be able to talk about my own experiences, as well as some of the challenges that I have had.
Exactly. And that's what we bring in. So let's start on that note, since you have mentioned that. Let's give, if you would, could you tell our audience a little bit about you, what you're bringing to the table for us today?
Yeah, first of all, I want to speak to the fact that I come from a family of entrepreneurs. My father was a contractor. My mother had a make-ready business or a house cleaning business, and she worked alongside my father in contracting and construction. He would basically get the houses built, and she would come along, of course, and clean them out. If you've never seen a home, and many of your clients, I know, are real estate investors, so they know how a house can look when it's first built from the ground up, and also after renters have left a home, right, to get it ready to be re-rented. So that's what my parents did. So I grew up around individuals who work for themselves. And as you would say, they ate whatever they killed, so to speak, and nothing to all the vegans that are out there.
Right.
But I went from there, Jackie, to actually watching my parents struggle, in and out of the business, especially being in Texas and construction back in the 70s and 80s. You had the oil embargo, the savings and loans, went down, and it was such a cyclical business. And I watched them. They took care of us, but they really did struggle. And my parents didn't go to college, so they didn't know anything about a peak and a trough and a recession. Right. They just knew when things were good and when things weren't good, right? And so that is actually what caused me to motivated me, really, after I went into the military, to major in business and finance and banking. I went to the HBCU, Texas Southern, right there in Houston. And so it was important for me to be able to understand, why is it that some businesses make it during certain periods of time and other businesses don't, right? What's that formula? And so I went from there, Jackie, to working at the banks. I've worked for Wells Fargo, BBVA, PNC, JP Morgan. So I've worked for the big banks. I've also been a CFO as well. So I've been on both sides of the table when it comes to business. So I understand the pain points, not only just from having parents who are entrepreneurs, but also from being on the money side of it, in addition to now running my own businesses.
Exactly. So that's what we bring in. We bring people that have that experience. So we're not just talking to someone that, took a class or a course. which you
Yeah.
did in a way because it was the course of life and you've learned some things. And so now you've been able to help, not just like I say, you help you, but you help others. And that's why we brought you in, because you do have that service where you can help and guide them. So I want to again thank you for being here. I'm looking forward to this definitely for this show. So what I would like for us to start with, if it's
Mhm.
possible, let's start talking about this dilutive capital. You and I have talked about it before. Like I said, it was something that was new for me for is the new terminology. And I
Yeah.
know it's really great because we do debt. When you come to me, you have to get a loan and go through the whole debt process, financials and
Yeah.
all of that. I
Yeah.
want people to understand what you do when it comes to raising capital, what that is, and how they deal with it. So we can start off with our first question, starting with the basis. What exactly is equity dilutive capital, and why should founders or small business owners care about it?
Yeah, and because capital, Jackie, it's two parts, right? It is either debt or it's equity. And you will hear people spinning a lot of fancy words, convertible debt, dilutive, non-dilutive. It's debt or it's equity, right? And there's in-betweens, as we call it, hybrids, but it's debt or it's equity. And so when it comes to understanding capital, and I am an advocate for helping individuals to increase their understanding, because the more you understand, the more options that you know are available, the more control you have over how you navigate through your business. And businesses that are growing, as you know, they at some point have to either take on debt or they have to take on equity or both.
Right.
And when people say, oh, you know what, dilutive, meaning that someone comes in and for putting money in your company, they get a portion of the ownership. They get a piece of ownership. And I've worked with companies that have gone public, right? Public companies like your Nikes of the world, your Amazons of the world, all the way down to small businesses where people just have their one barbecue, food truck or
Right.
what have you, and everything in between. And that has really been unique about my career, because typically people will go one direction out of or the other.
Right.
They will
Right.
either work with large corporations or they'll work with small businesses.
Right.
Because of my love for wanting to understand and the everything my parents went through, I wanted to know it all. So that is how I got educated when it comes to capital. And what I say to people is that you don't have to be a publicly traded company, right? And even then, when people hear names like Jeff Bezos, Mark Zuckerberg, right? Jeff Bezos, CEO of Amazon, Mark Zuckerberg, who is over Facebook, but Meta,
Mm-hmm.
right? You can look this up yourself. I'm not even going to give you the percentages, but I tell people, ask Siri, go into your phone, Google, how much of Amazon does Jeff Bezos own?
Mm-hmm.
Ask Google, how much of Meta does Mark Zuckerberg own? And you will be surprised at the percentage of the company that these mega billionaires actually own. They are not the full owners of these companies, although they started them up and they are the CEOs. So now let's come down a bit. And that's the part that I want people to get used to hearing, that because I hear it from especially small business owners all the time. Oh, I don't want to give up, for money in my
Right.
company. I know this person wants to invest in my restaurant and we can become a franchise, but I don't want to give up any control, right?
Right.
I want us to understand that some people, not everybody, some people would rather own 20%, which is right around where Zuckerberg and Bezos are, and
Mm-hmm.
be multi-billionaires than own 100% of a company that's only worth a few $100,000 or $1 million. You
Exactly.
have a choice when you understand. And so today I want to break down the myths around dilutive capital, that nobody's coming in to try to take anything from you. No
Okay.
one is coming in to try to control your company unless you are doing a bad job running it, right? Some
Right.
people need to fire themselves just because they're the founders.
Yes, ma'am.
But dilutive capital simply means that in exchange for me investing in your growth, in
Mm-hmm.
exchange for me investing in the belief of your business, I do want a percentage of it. We all see this on Shark Tank, shows that have
Mm-hmm.
been
Mm-hmm.
popularized like Shark Tank,
Right.
right? And so that's what dilutive capital is.
Okay, so I know you kind of mentioned like myths, but let's talk about that a little bit. What are the biggest misconceptions you see about raising money? Doing that myth that goes with that.
Yeah, and there are so many, but the top ones are, if I simply just have a business plan, or I simply just create a business and I get a few customers, I should be able to go out there and find someone who believes in my company, and they will either invest millions, and there's something about $1 million, Jack. I don't know what that number is. I guess because it's a nice, even round number. But no matter what you ask any entrepreneur, it's like, well, how much do you need? $1 million? It's like, how did you come to, where did you get that number from, right? I guess it's just a comfortable number for them.
Right.
But the biggest myth is that people believe that the investors have to be in love or as passionate about your company as they are. The investors are not in love with your company. The investors want a return on their investment.
That's right.
Right? You may love your cookies or your cake or your barbecue recipe. What they want to know, who else likes your cookies and your cake and your barbecue recipe, right? And they don't want one or two people. They want, in most cases, they don't want your wife and your uncle and your kids who are all
your family, your best friends, your sorors, your frat brothers. You right?
Yeah. All the people who don't want to offend you, so they just gonna, tell you it's great and then spit it out.
Right.
But you need hundreds of thousands of people when it comes to big investors, right? And sometimes it's just you just have to get the first couple of hundred just to be able to prove that your idea has traction, that whether it's a product or a service. Because I don't want people to think that everybody is going to end up like Amazon. You don't have to end up like Amazon. Some of the most successful businesses in the US, those are sexy businesses because we all know their names.
Right.
But small to medium enterprises drive growth in the United States. They hire the most people. Corporations are just big, but the majority of the people in this country are hired by small to medium enterprises.
Right. That's true. That's true. And so that is definitely a market out there that we need to kind of look at when we have our business, that you're in that small business, medium-sized business arena, but it doesn't mean you can't get the same thing the big ones. And that's what you're going to talk about. It's just the proper way you have to go. So with that said, with a small business, medium-sized business, when do you think is ready or not ready for them to do equity investments? What does that look like?
I would say, and I'm going to speak in particular for companies that are in between those eight, that say that startup day zero, and let's say between 0 and year 5. Some in there from 0 to 5. The sweet spots oftentimes are 0 to 3, but let's say 0 to 5. The best time to start looking for a potential equity investor is when you, as a CEO, have, number one, secured a team, right? You're not a team of one. You have at least someone who can come alongside of you as a co-founder, or a COO, and you can give people titles and roles, right? And understanding a COO, and at a minimum, you have some type of financial partner, right? If not a full-term CFO, a fractional CFO. And if not a fractional CFO, a really good CPA. I didn't say bookkeeper. I said CPA, right? The first thing, it's a difference. So the first thing is to secure a team. And one of the reasons why I say the first thing is to secure a team is because investors want to know that you can lead. They want to know that you are a leader as a CEO. And one of the ways that it's not written down on paper that investors can determine whether or not you are a leader, if anybody is willing to follow you.
Exactly. And that makes a lot of sense. That makes a lot of sense. So let me ask you this, because you mentioned teams, but can you tell me what some of the main people roles you should have when you start your team to that point? What does that look like?
Well, you, right? You're the CEO. You need at least a financial person on the team or somebody who understands finances.
And no bookkeeper. Now, let me stop you. I'm sorry to break up right here, but I want to emphasize this to everybody. A bookkeeper is not adequate for this type of thing when you're dealing with investments and you deal with equity investments as well. You need a CPA or higher, like what you're saying. Okay, I just want to say it in the piece. Okay, go ahead.
At a minimum, an accountant, right? Because a CPA is a person who can audit, right? But
Right.
at a
Okay.
minimum, a person who is an accountant and not a IRS agent, right? These you have or bookkeeper.
Yes,
Uh,
ma'am.
and the reason that you need this is because there's a lot involved once you start parceling out equity in a company, right?
Sure.
So someone who really understands finances,
Okay.
you need an operations person, right?
Okay.
And in today's world, you absolutely have to have someone on the team that understands technology, right? They
Right.
don't,
Well, you do right. Now,
yeah.
would
So,
you put cybersecurity in that technology? You don't
yeah,
have to have that then, or do I need to show that or no?
yeah, your technology person should have some knowledge of cybersecurity, right? And
Okay.
how to set your company up under with some cybersecurity compliance and risk management.
Mm-hmm.
But they should be someone who not and when I say technology, not just someone who can code, right? We could go
Okay.
all of us could go out and probably find somebody online or that can code, but
Right.
you need someone who has a technology operations and compliance background so
Got it.
that they can help you structure the company and build a framework because you cannot create a business in today's time without having some type of technical or technology component, right?
Oh my
Uh,
goodness. So true.
and I've
So true.
created a what I call a modern viable business. I've actually trademarked it and it's registered. But a modern, yeah, it's technology. But you have to have the ability to be able to pull data in real time. In addition to leveraging tools like AI, artificial intelligence, cybersecurity falls underneath that. Having a modern viable business, even a small business, because so many people are getting ripped off
Right.
because of cyber scams. And so start building that into your framework. You cannot start a business in today's time without having some technology platform or framework. And
Right.
it's cheap. Jackie, it's never
Right.
been cheaper. I should say, it's not as expensive as people think. Even when people hear the term CPA or an accountant, oh, I can't afford that. You cannot not afford an accountant or a
And
CPA.
not. Yes, ma'am.
And the majority of these people are not engaged unless you don't have to pay them unless you engage them to do something. And there are so many tools online now whereby everyone from QuickBooks will offer you a CPA or an accountant as a
Right.
part of your subscription.
Exactly.
You don't have to pay a full-time person. Now you have online platforms, you pay an extra $20 a month, you can have all the online conferences that you want,
That's true. That's true. That's true. So
right?
yeah. So you're saying like so, and let me say this too on that tech, and I know we're talking on a little bit more on it, but this is what I was surprised at. We had a loan that actually closed where the lender was looking for the compliance part, okay, that
Mm-hmm.
you talked about. But what we were kind of shocked on, he wanted to know what is your security of protecting all your files? What does that look like? And we were kind of
Yeah,
stuck. I was surprised they asked that, but they are now taking that consideration, like what you're saying, because
yeah,
you got so much which the ransom and people
yeah,
coming in and all that. They actually want to say, okay, we're gonna invest in this business. How do I know you're gonna still be here and you cyber won't take you out? Because
yeah,
cyber is taking, fraud, it is taking people out. So I
yeah,
think that's something you mentioned, but I do want to emphasize it in this day and time. I
yeah,
You are so correct that they need to have that because it
yeah.
costs a lot of money when you don't have it.
Jackie, I have a client who's a small business owner that was taken for over $150,000,
Ooh,
right? Now, coming off the books of a small business owner, $150,000 is a lot of money to
that's
go out the door,
right,
right?
right.
And this is why that conversation is so important. And lenders now are asking, what are your
They
protocols?
sure are.
What do you, just like they ask for your SOP, your standard operating
Mm-hmm.
procedures,
Mm-hmm.
you need to have in your SOP cybersecurity. You need
Yep.
to have a plan. And individuals aren't realizing how sophisticated these companies are because when you get taken, this is the part where the people don't understand. You were the one that was scammed. If it were the bank that got scammed, the bank would reimburse you. But
Yes.
when you get scammed and it has nothing to do with the bank, the bank cannot reimburse you. But if they have a loan out to you now, they are at risk
Right,
because you just
right.
had 150 grand that went out the door. That was going to probably be used as payment on, back towards their loan.
Right,
So
right, exactly.
that is why companies now are asking up front Do you have this in place? Because they don't have any protection when you're scammed outside of their environment.
Exactly, exactly. So we know now equity wise, and not just the banks, but like you said, investors, they
Yeah.
want to see that too, right? On the equity side, right?
Yeah, investors want, and anyone who has money in your company, either as equity or debt, are wanting to know what is your technology risk management. That's why I said when building that team now, it used to be you could just get away with a COO, a fractional CFO and yourself. But
Secretary,
now,
yep,
yeah,
yep.
and now you have to have that technical person on the team that understands risk management,
Right,
the
right.
side of the house.
Okay, and that's something good we need to have. Now, let me ask you this. This experience with the capital,
Mhm.
that's with Beck Evans and Associate, right?
Yeah. Yeah.
Okay, so I want to make sure you guys that that's where she falls in. That's her company, the Beck Evans and Associate. But let's do this. What have you seen, for us working with Beck Evans and Associate, the top factors that make a company more attractive to investors or less likely to give up too much equity?
Okay. Yeah. So here we go. We already talked about team. One of the other areas where you must be able to have clean numbers, right? You
Right.
have to be able to have clean numbers. Whether if you are a startup, you have to be able to prove out your projections.
Yep.
And companies and investors know as soon as you put in your projections that you're going to make $20 million your first year, $10 million your first year, they already know
Oh,
you
can
don't
you say that? Oh, Lord, that is so true.
they already know that you don't understand a sales cycle and you don't understand your business and that you are not dealing with data, right? You're not looking at actual data. You're just pulling numbers out of the sky. And so that is the area after a team is being able to prove out your numbers. Now, when I said 0 to 5, so let's just say you're a 3-year-old company or 4-year-old company or 5-year-old company. One of the areas that individuals also don't understand with investors, again, going back to having quality numbers, you
Mhm.
cannot roll up on some investors with your QuickBooks files, right? There are different layers of financials. You have
Right,
company prepared, you have what they call compiled statements, you have reviewed statements, and then at the top of the house, you have audited statements.
right.
At a minimum, when you're talking to any kind of investor, even when you're running projections, again, that's why it's important to have an accountant or someone on your team. So when you're presenting your numbers, whether you're an existing business or a startup, you can say, hey, my projections were ran by my accountant or
Mhm.
they were looked over by my accountant. Or if you're an existing business, you can say, I have reviewed statements or compiled statements, which just simply means somebody else put an eye on your numbers.
Exactly,
So
exactly.
some type of third party validation, right? About the quality of your numbers. And so after the team and the numbers, the next thing that you need to have in place, and this is important for any business, you must be able to have some type of proof that somebody wants your product or your service.
That's true.
And then the best way to do that is through sales. Have you actually had any sales? I know entrepreneurs that spend all kind of time getting business cards printed. They spend all day, spending $5,000 on a website, all this fancy stuff, but they haven't sold anything to anybody.
So
Or
now
not.
let me say that on our side, we call it account receivables. They
Yeah,
ask for the account payables, which is your debt, but they really want to see your account receivables because what I told them, those are like what you have coming in. Then
yeah.
that's what, and see that can be part of your projections as well. So you are so correct. That's what they're looking for from the bank. So on your side, you saying that's the same thing your
They're
equity investor looking for, right?
Yeah, and let me say the difference between an equity investor, right? I know on your bank side, and you guys can talk about this more, but lenders have to be very careful about who they give money to because
Mhm.
they expect to get that money back,
You're right.
right? And
Mhm.
they can't give out bad loans because if they keep giving out bad loans, they don't have the ability to give good loans to good companies,
Right,
which
exactly.
is why on the lender side people are always so surprised at how many no's that they get, how many times they get turned down. Well,
Right.
that's because that's a very small box that they have. But
Very.
on the equity side, which is completely different,
Mm.
investors oftentimes will invest in 10 different companies, and they call them portfolio companies,
Mhm.
with the belief that one of them will do well. I
Mm.
know that sounds a little different.
That does.
It sounds a little different, but they can actually have 9 of their investments go bad on and bet on 1 or 2 going exceptionally well. Yes, equity investors understand that they will likely on the very front end have losses in terms of the companies that don't make it to the other side, so to speak,
Mm-hmm.
but they're okay with that level of risk because equity investors are individuals who put money in that they can afford to lose,
Uh-huh. That's
right?
true. You're
The
right. You're
bank
right.
really can't afford to lose their money, or lenders
No, they
can't afford to
cannot.
lose their money, right? Because if they're lenders, they're lending directly off their balance sheet. And banks are also, people don't realize they're lending out your deposits.
Mm-hmm.
So that's my deposits, your grandma's
That's
deposits,
other people' money, right? They can't
other
afford to
people's money.
lose, like you said.
But investors, that is 100% their money, right? So whether it's coming through a private equity firm or venture capital, they have individuals that will put in, which is why it's called private or it's called venture with VCs. They put their
Mhm.
money in. And
Right.
these are
Okay.
typically high net worth individuals. There's a process in order for people, in order to be able to invest in private equity, and I'm not talking about hard money lenders, right? You got
Right.
people
Right.
out there that will literally go in their bank account and lend you some money, but at 30% interest, right?
Right. Right.
We're not
Exactly.
talking hard money lenders. We're talking about certified lenders that are angel investors, private equity, venture capitalists, but they can
Okay.
afford to lose some of their money to hit it big.
Excuse me. Okay. So that, and like I said, so that makes a difference. You right in the debt side. So let me ask you this: when most entrepreneurs think about funding their growth, what shift in mindset or education would you start with?
Yeah, and let's go back to some myths. What I have found being in finance for many years, you all right over there?
I'm okay.
You go off camera if you need to
I
be all
know
right.
if I can find it. I am so sorry.
Sometimes our liquids go down the wrong pipe.
Okay, you
So
can keep talking.
yeah, but
You
I'll
keep
I'll
talking.
keep going. Yeah, so but I just want to make sure you were okay. So what people don't realize is that you cannot buy into all of this stuff that they have on the internet. I have seen some of the craziest things out there on social media whereby they're telling people all you need is an EIN and an LLC and you can go out and get investors and all these other things. And they're trying to get people to invest in trust and all of these type things. And I'm like, first of all, a trust will protect your assets. So in order, before you go out and invest in a trust, you need to get some assets first. And then you can start working your way around the trust. But one of the main myths out there, Jackie, is that certain people are not able to get equity investments. And oftentimes they'll base that on your background, where you may come from. You don't come from the right side of the track, so to speak. Gender, they'll base it on race or ethnicity, and none of those things are true. In whole, right? There are slivers of truth to most things that people will say, depending upon what side of the table you're looking at it at. But for the most part, it's because people aren't prepared, and they aren't prepared because they haven't met someone like me, or they haven't met someone who is really versed on the side of equity to help them to understand the packaging that it has to come with. Just like on your debt side, there's a certain way that lenders, debtors want their information presented to them, right? And they call that loan packaging. It's the same way on the equity side. There's a certain way that equity investors want information presented to them because they're used to looking at it that way. And if you give it to them in a form that they're not used to looking at, they don't have time to sit there and go through your mess, because guess what? There's 100 people coming after you who also want that money. So they're not going to waste their time trying to shuffle through all of your stack of papers that you don't even have in a certain way. And what is that certain way? Equity investors typically want to see a deck, what they call just a presentation deck. Who are you?
Right.
What is it that you have? How do you plan to make money, and or how are you already making money? And what is your ask, right? And that is where most people going in for equity they fall off on that part, because they
Right.
go in, like I said, asking for $1 million, and you don't need $1 million.
Right.
And you start to look like a novice in front of these
Mm.
people. And going back to what I said, investors not only are betting on your business, they must be confident that you can lead as a leader. And I've ran across small businesses, people that I thought had a great business model. I'm an investor
Right.
that I would have invested in had they known their numbers. And when they got to the end of their deck and I started looking at those numbers, I said, okay, we can't do this, because this person here is in a fantasy land. And you're not about to take my money and go and run your fantasy through, right? Right.
Right. Right.
So investors want to see your what they call a capital your capital structure. They call it a your cap table. They want to know who else is already invested in that company, and do not lie to them. If your mother put in $500, they want to know who else put money into that
Exactly.
company, because it's a risk to them if they start investing in your company and then 2 months, 3 months later, when you're making a bunch of money, people start coming out of the woodworks saying
Right.
that they have 10% of your company and 15% of your company, and you promise them that and promise them that. So they have to have what they call a cap table, right? They want to know everyone who's put money into that company. In
Right.
addition, they want you to have what they call a deal room. And a deal room is just simply an area where you have all of your documents loaded up into a file. It could be a Google Drive for all they care. But
Okay.
they just want one spot where they can go and look at your incorporation documents, your EIN documents, your projections. They want one place that they can go to and look at all this stuff. And from there, it's pretty simple. And then you have what you call pitch competitions, where people will go out and pitch, or you work with companies like myself, where we put you in front of an investment bank, and there are investment bankers out there that work specifically with small businesses. But it's a fee. You're going to have to pay a fee towards them, because they're going to put together all of your packaging for you, right? And the reason that they charge you up front is because they know that most small and medium enterprises will not bring all the information that they're going to need. So they
Okay.
spend a lot of time up front helping you package your deal.
Right. Right. So you can see it. Now let me say that with it. And I apologize for coughing. I did get stuck on my water. So, but I'm okay.
Sure.
So this, and thanks for covering for me. You did a wonderful job. This is a question I have for you too, talking just in that line that you said. When we dealt with M&As, which is, mergers and acquisitions, we have,
Uh-huh.
some of our wealth managers kind of deal with that. So they come in and they do have investors. That's not our side. But I guess if you can talk on, for it's being set up, that how people believe that they do a business plan
Mm-hmm.
that is good for an investor, an equity investor.
Yeah.
So, what's the major differences? I mean, you mentioned some, but I think having you is so important, because you can tell them, and we want them to
Yeah.
definitely call you. But what's the difference with that, so people can understand they're not the same?
Yeah, and I agree, and that's a great question. No one has actually ever asked me that question. They've never asked what's the difference. But here are the differences. With a business plan, you typically start off with an executive summary, right? And then you go from your executive summary into what your marketing is for your product or your service. Then you do a SWOT analysis,
Right.
and you go to, you do your go-to-market strategy. You put
Right.
a slide in there about your team and all this other kind of stuff, right? And then at the end, you start putting financial data in. Well, with investors, it's similar. However, right, they're less interested in the summary, the executive summary part.
Right.
Whereas a business plan can be, I've seen business plans that were 20 and 30 pages. Investors, for the most part, will limit you to 10 slides or less. Some of
Mm.
them will limit you to 5. So
Wow.
you have to be able to explain without putting words on there in 7 font, right?
Right, right,
What it is like it essentially your elevator speech. Who are you? Who are you serving? And how much money are you going to make and how quickly are you going to make it?
right,
That is what investors want to know. They do not care about all of the fluff and all of that other stuff that will typically go into a business plan. And you have to be able to talk to them. And normally, when you go in and talk to investors, you don't have a whole hour. Most times, they will give you sometimes 5 minutes to
right.
say what you got to say. And if you're not saying the right words within those 5 minutes, they're out. They've checked out. They've already checked out. And that's the major difference between investors. And remember when I said investors are willing to lose money? Eight, if they have 10
Right.
investments, they're willing to lose money on eight. Well, that the I guess you could say the cons of going to an investor is that they have a very short attention span.
Yes, they
So
do.
they
Yes,
have
they
a
do.
very short attention span. So if you are not truly prepared and spent time with someone like myself or someone who can actually get you prepared to get in front of an investor, which is why you will hear people say, "Oh, I went to 400 different investors and all 400 of them said no."
Right.
And what I say to people is, why didn't you get help at 50 or at
There
25?
you go. That's what I'm saying.
400 is a nice story to tell, but you didn't have to go to 400. And most people still don't even get them, or they get less than what they
Right.
were out there, asking for. Uh, Ask for help up front. The investor world is a relationship driven world, and
Mhm.
it is a personality driven world. Whereas in lending on the
Yes,
non-dilutive side,
right.
it fits in a box. If
Yeah,
you had
it's just
this
the cash
leverage,
flow, and that's it. If you
yeah,
cash
you
flow, you good. If you don't,
yeah,
hey,
if you,
that's
if
it.
you out. But
Right.
on the equity side, it is a relationship
I
driven
agree. I agree.
market, right? And they have to like you. And it's easier for people to like you when they trust that you know what you're talking about. You come in with a strong team and you have everything, like I said, in one place for them to, when they do say, you know what, I want to know more, they want to know more right then. You can't
Right.
go home and put your stuff together and come back the next day. You
Right.
have to be able to say, here's the link to my deal room, here's the additional information. And I mean, and it's just that quick, or they have moved on to the next person. They have a very short attention span.
And so that's why I think it's so important. And I'm glad you're here because that's what we kind of have seen and people have ran into. They want to do the equity side because we TDJ equity funding, but we don't do the equity part. It's the equity just the
Yeah,
part that they do the debt. So what I'm finding out when we come to people looking at raising money, like you said, like a lot of things, they don't get the proper help. Why are you going 10 times and you have never had a professional person come in or a company come in and help you put it together? Because one thing about it, you guys are worth your money because I know several of my clients have used you guys before. And
mhm.
it saved them. And they said they've sold businesses before. They've had some, different investments. But they say having someone to know about the deck and know how to put everything together and all of that, the time it saves. But more than that, you guys have a great third eye when you bring a
Yeah,
company in to help out. Because it's some things as a business owner, because I'm passionate, I'm connected to it, that
yeah,
I may think, oh, this is going to be the main thing. And you're going to be like, no, 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 no. It's not. It's this. Because like you said, investors want to see, are we selling to the massive or are we selling to
yeah,
your friends? So that's
yeah,
why I think you guys are really good and worth the money to bring you guys in. I mean, so how do you
yeah.
feel about that? Do you think that's a better way to do it that way as well?
Yeah, look, Jackie, this is what I say to folks all the time. I'm not going to care more about your success than you do, right?
Mm.
And some people it's their pride, some people it's their mindset, right? Which
Mhm.
also speaks to whether or not you want to do business with this person, and I'll expound on that. A lot of people are so prideful, they don't want to ask for help and they
Oh,
think
yeah,
that they
that's true.
got it, right? And then these are also the people who are quick to fall back on victimization. Oh, they didn't want my business because I'm too smart for them. Oh, they didn't want to be in my business because they're trying to steal my idea. Oh, they don't want to be in my business because I'm black.
I've
Oh,
heard
they don't
that.
want to
I've
be in
heard
my
that.
business because I'm short. Oh, they don't want to invest in my business because my hair is blonde. Oh, they
Right.
don't want to invest in my business because my
Right.
teeth are too
Right.
white, right? They come up with all of these things other than you. It's you that's stopping you, right? And then you also have mindset. You have people, believe it or not, Jackie, who go into this process expecting to fail. They really
Oh,
don't
yes.
want to take on the responsibility of what if it works? What if somebody actually says yes? And
Right.
now you have to be able to perform. And there are people who are, I call them perpetual dreamers. They
Hmm.
like to stay in their mind, and if they could find other people to have a pity party with them with why they can't get this and can't get that, believe it or not, it's actually a true thing.
Right.
I've
Right.
ran into people when I started in banking 20 something 25 years ago. I know people who are still walking around with the same business plan that they had when I met them when I was coming out of undergrad 25 years ago.
Wow. Yeah. Yeah.
And
See.
they exist. And these are what they say. Some of the best ideas on this planet are in graveyards. Those are the
Yeah.
people who go to their
I believe
grave
that.
with ideas, right? So mindset has a lot to do with, and I say to entrepreneurs all the time, if you approach any process with an energy of I know it all, I know better than the banks, I know better than the
I had to stop again. That's okay. We're gonna keep rolling with this thing. All right. So we're gonna wait for her to kind of come back in. Everything's kind of going in and out. Just the internet period. So apologize for that.
yeah, no
We're
problem.
back in. We're
And
back in. Okay.
yeah, these are people that I could spot them all the ways. But mindset has everything to do with you as an entrepreneur and you as a CEO.
Right.
Are you coachable? Do you have the type of mindset where you can listen? Are you coachable? Are you just as good of a listener as you are a speaker? Right? Can you lead? And at the same time, can you follow someone else's direction? Because oftentimes when people put equity in your company, similar to what you see on Shark Tank,
Hmm.
they want to also pour into you and open doors up for you so that they
Yeah.
can help them kind of secure a return on their investment, right? So
Right.
if you're that person, like I said, who thinks you know everything, but you ain't got no money,
Right.
right? Them.
Yes,
So
ma'am.
investors know to stay away from you. And mindset, whether your shoulders are slumped when you go into the room, they can tell if you really are
Yeah, they
confident
can.
about yourself and what you're doing, or whether you got a peacock feathers behind you. You so prideful that you're not going to be able to listen
Right.
or take advice from someone. So your mindset around equity is a big difference. That stuff doesn't come up with lenders, but it
No.
comes up with investors. It is absolutely they say the 10-ton elephant in the room is
Hmm.
your mindset when you go into that room.
But you know, Shark Tank actually talked on that because they said it was a character. They said, well, because I've seen them say, hey, I'm looking at the character of you, things of that nature. So it does. So this leads
Mhm.
into like, I know you have a program, this Bridge 40 method that
Yeah.
actually deals with the mindset. So I want us to talk on that as well because that service is needed as well. Can you give us a little bit about that?
Yeah, one of the companies that I own is actually Seismic Transformations, and that's SEISMIC Transformations. And you could go to
That's it.
seismictransformations.com.
Okay.
And I also have an app, which is the ST360. It's just ST Seismic Transformations 360. And
Okay.
it's downloadable on Android and also iOS for iPhone. But
Okay.
I created a program that is called the Bridge 40. And the Bridge 40 is all about helping career professionals transition out of their careers as corporate professionals. I don't care whether you're a VP, a managing director, a
Right.
CEO, it is a different mindset coming out of a corporate world into entrepreneurship. It's the difference between being on the passenger side and then being the driver, being the co pilot and the pilot. The co-pilot doesn't nearly have the kind of pressure that the pilot has. A passenger in a car, you just in the car. You may get asked to operate the AC or the heat or to change the station, but you ain't driving, right?
Right, right.
And so it is a different mindset. And I have based Bridge 40 off of my own transition, right? Even though I was an entrepreneur in my prior past, my parents were entrepreneurs, I got re-indoctrinated into corporate. And coming out of corporate, although I had a set of skills, I have a undergrad, a MBA, there were certain things that I had to relearn about being an entrepreneur and then operating in that entrepreneurial mindset, right? That every decision is on me. It's not even in a corporate world. I was a division lead for largest bank in the U.S. But guess whose objectives I had to meet? I had to meet their objectives.
Exactly.
Right? It doesn't matter how big your territory is. That's not your territory. In your business, whatever territory you're in, you got to cover that territory with your resources. I was covering a territory with the resources of one of the richest organizations in the country. So that's the difference. Even when people I manage 500 people. You manage 500 people. Those aren't your employees. You are an employee along with them of the firm that you work for. You may manage them, but they are not your employees. You're not responsible for their paycheck. You're not responsible for their 401k. You're not responsible for their insurance. And so Bridge 40 is a process that helps these career professionals who have all the skills in the world that want to move over into entrepreneurship. Basically, get yourself out of that corporate mindset and to bridge yourself over into entrepreneurship. Now, don't just jump in, because I don't care how successful we're on the other side. Most people get over here and they can't swim because, again, they show up with the wrong mindset.
And let me say that on this, and reason why you guys are good, because you all have seen it. We've seen people that started, like you was working at let's say AT&T, and then all of a sudden you said, I'm gonna go ahead and lay my own fiber because I've been doing it for them so I can start my own company. Well, you come to us for lending. Let me tell you what we see. We see that you know how to lay fiber and you know how to actually sell it, but your books are jacked up. You know what I'm saying? They don't understand the administrative side of it. And then one guy even told me one time, he said, well, paperwork just not my thing. And, numbers are not my thing. Sweetheart, you own a business. What do you mean numbers is not your thing? So I believe they leave, like you said, from that career, and that you don't have to understand, you don't have a downtown office to go talk to. You are the downtown office. So that's why I think what you have is so good, because people don't realize how important, I think now more than ever, how much it is to have a transitional, I call you like transitional coach, because everybody needs it. But let me ask you this. What type of people, because I got my theory, should look at getting a transition coach as of now? Because, it is changed. The dynamics have changed. So you tell us, who do you think? What do you think a type of people need a transition coach along with this?
I know, right? I use myself as an avatar. High performing people need a transition coach, right? High performing people who are used to winning. They're used to performing at a high degree.
Now, why do you say that? Why do you think they need that?
And the reason that I say that is because they are success ready. They really are. However, they don't know what they don't know. They don't know what they don't know. They have been so in the weeds of their own success and not understanding that your success was partly because of the organization that was backing you and supporting you to have that success. That is a tough thing to admit to yourself.
Man, that's a shocker to even find out, like, I don't know what I'm doing.
Good.
That's what it is.
That is a tough thing for high-performing people to admit it, because I did this. There was some of you in there, but you also had an organization that gave you all of your sales strategies, right? You also had an organization that when you needed support, they prop you up with a mentor. When you needed extra resources, they went to their budget and gave you those resources that help you build out your team, right? And
Right.
so one of the things high performing people is that they are they come out of their positions with their egos, and they don't
Mm.
realize and understand that you
Okay.
are the person that truly needs a transition coach because you're already full of yourself.
Right.
And when you get over into this other world where it's a shock, it's even for me, even knowing better, it
Right.
is a shock to people to realize that, just like you said, when something goes wrong, it's you and whoever you pick up the phone and call.
That's
You
right.
can't get on the phone and call your manager that's up from you and have them help you fix your problem, fix your
Right.
issue.
That's true.
So these individuals need a train, and that's who I work with. I mostly work with BPs. The majority of my clients, I shouldn't even say majority with BP, the majority of my clients are managing directors and
Right.
existing CEOs who are going into other businesses. Believe it or not, I was surprised to see them showing up because it was Kim. I worked my butt off in
Makes
this
sense.
business.
It makes
I
real
basically
sense. Yeah.
created a new job for myself. And I want to sell this business and go into another business, but I don't want to work the way that I'm working in my next business, the way that I am in this business. Can you help me make the mental transition? And I say to people all the time, this background that you see is my sunset here in Honolulu, Hawaii. I work maybe 5 hours a day, max,
Mhm.
right? And that's managing three different businesses. And people
Wow.
ask me, how did you set it up that way? Because number one, that's the only mentality that I went in with. So
Mm.
everything was set up to be automated from the front end. Like we were talking about, how do you set it up from the front end? And if
Right.
you're in your business, how do you go back and do these things? But getting back to the equity side, working on that mindset, I have cut customers, clients that will come to me and say, Kim, I have money I want to put in my business, but now I've had success on this side, but I want investors because when I go in and this time I want to build out a whole new infrastructure. I
Right.
want to do what you're doing. I want time freedom. I want location freedom. I don't want to have to come and work my business 13 hours a day. I did that when I was in corporate, right?
Right.
I want to do this next venture differently. And for those people who are, again, for the Bridge 40 that are coming out of corporate, I have clients now that are managing directors, and these were people that I knew when I was in corporate. They've gone
Right.
through my program, and they are looking at me like, Kim, this is the best thing that has ever happened to me. It's a paradigm shift, it's a mindset shift.
Right.
They directly say to me, I did not know I could live my life like this. I did not know that I can work 6 hours a day, 5 hours a day, and still maintain my lifestyle or
Right.
greater. Because
Right.
now you actually have your peace of mind. Isn't
Right.
the
Right.
Bible say that peace that surpasses understanding? We are creative beings. And when
Mhm.
we're able to create, and it's a difference, and this is what I tell people all the time, and when they get into the program and they see it, until you see it, it's hard to explain. You don't realize how deep in the matrix you are
Right.
until
Right.
someone pulls you out of the matrix.
Exactly.
That success that you had, yes, you were the driver, but of your getting up every day, but you went and you drove somebody else's vehicle that was already put together,
That's
that was
true.
already built for success. So the momentum wasn't just you. The momentum was this huge conglomerate that gave you a business card and said, hey, go out here and represent me. Now the business card has your company logo on it. It has your business on it. And if it don't go forward, guess whose fault it is?
Exactly. Exactly. Exactly.
There
And
ain't
that's
a
real
thousand
true.
other managers who can pick up the ball and run
Just
with it.
you. Just you.
It's
You
you.
you were, and you know something what you talking. I thought about. I'm being aware. You tell me what you think. That even people that have been in their business, running it for a while, they need transition coaching because you know what? They're still 10 years ago.
Yeah.
They don't realize what has changed and the people have changed. How you dealt with your employees 10, 15 years ago is
Yeah.
not the same. So I see where even those that exist now, if you've been in business for a long time, you should really consider that because it's still some type of transition, right?
Yeah.
That
And
process.
that was the other part of my clients as I was building my business. And as you know, Jackie, when you're building a business, you have an idea of who your clients are going to be.
Right.
And then when you start really getting into your business and delivering your services and your products, and you start getting feedback from your clients, you start to understand that people are telling you what they need. You can think you know what they need, but when they start telling you what they need, the smart business owner will be agile in their company, right? I say again, I remind people all the time. When Amazon first started, Amazon was a bookseller. They sold books.
That's
You
true.
used to be
That
able
is
to go to
true.
Amazon and get your books printed on demand.
That's
Now
right.
you could get anything under the sun. Amazon
Anything.
had to grow into what it's doing today,
Right.
but they started off selling books,
Right.
right?
Right.
Online and audible books. But even LinkedIn, which many of us on LinkedIn basically started off as a recruiting tool for recruiters.
Exactly. Sure did. You're right.
And now it's grown into a platform where you could take classes and connect with people and all this, a sales engine and all these other things.
Right.
But the the majority of my clients are managing directors, VPs, the managing directors, and 30% of my clients are existing businesses, just like you said. They come to me and they're literally, so I've had clients who have come to me in tears. Kim, my health is going bad. I've gained 20 pounds, 30 pounds since starting this business, like you said, 10 years ago.
Right.
And one of the main things, Jackie, that comes up time and time again is that many of them are wanting to not be in the business as much as they are.
Right.
They're still 60 hours, some of them 80 hours a week
Yeah.
into their businesses. And they're like, him, I can't maintain this. I've been doing this for 10 years. My blood pressure's up. I done went through a divorce. Some of them are working on their second divorce, right?
Right.
And they
Right.
come to me and they just say, I'm throwing my hands up in the air. And the majority are referrals because people
Right.
are saying, you help such and such. I don't even recognize him anymore. I saw my friend on the golf course and I was like, man, what happened to you? You
Right.
lost
Right.
weight, you actually looking happy, you dating again, and all this other kind of stuff. And they're like, well, I went to this coach. I went to this transition coach.
Mm.
And people who people, and I'll put it to you this way, Jackie. I got to the point where I just said, I don't care about, I was on my next promotion, bonuses are good, life is good. I'm flying all over the country
Right.
and on somebody else's dime. And I just said, I can't do this anymore. I can't get on another plane. I don't want to go through another airport. And my back was, just I'm at the chiropractor, every week.
Right.
And I just said, there has to be a better way to do this. And I found a mentor, right? I found a mentor and worked with a mentor for over a year.
Right.
And it just, and it's mindset. And unless you believe and you can see that things could be done a different way with someone who's like you, come from the same background, but they've been able to transition. And it's like, okay, if they could do it, and they've taught other people to do it, and there's other people, hundreds of other people, thousands of other people, why can't I do this? Right. And it just starts with the curiosity of the question.
Right.
And that's what I'd say that most of my clients come in skeptical. Oh, and they pay their money. They pay their money, but they don't expect to actually see a transformation or change.
Right. Right. I can see that. Yep. So that's what you got to see.
Yeah, but when they come out on the other end of this thing, they're just like, I didn't believe where I am now was even possible.
Because transition, that's what I'm saying, coaching helps. So let me ask you this before we get out. So what do you feel if someone is listening today, feels stuck in a corporate autopilot but dreams of freedom what's one of the seismic, say the word for me.
Seismic transformation.
Seismic step they can take this week to start moving toward entrepreneurship?
First step is to allow yourself to be curious. Okay. One of the things that we're taught as adults is to give up on our imagination. And we believe that that's just child's play. Right. The first thing that you have to do is go back to being curious about what's possible and what's the potential of your life, if you're not even first open to the idea that your life can be different, you're not even going to be in step 2 to even accept any kind of change. Even the people that have come in, like I said, as skeptics, the one common thing that everyone who enters into my program is that they have at least allowed themselves to imagine a different type of life and the possibility of it. Just the curiosity.
Right. Okay. So just start with that. Oh, that's so great. Well, we want to thank you so much, Ms. Kimberly, for being on our show today and being a part of our editions of the Giving Power to the Business about owner. Thank you so much. Is there anything you want to say? Because I want them to know how to get in contact with you. If you don't mind repeating that, how to get in touch with you. Would you please let the people know that as well now?
Sure. I'm a multi-company CEO. If you want to talk about anything on the equity side, you can reach me at Beck Evans, and that's BECKEV as in Victor, ANS Limited Ltd.com, BeckEvansLtd.com. And if you're ready to start taking that leap, and even in business, to move your business to the next level or move from corporate over to entrepreneurship, you can reach me at Seismic Transformations, and that's SEISMIC Transformations, TRANSOSFORMATIONS.com. Or you could just Google Kimberly Nicole Evans, and all of my stuff will come up.
And she is.
And you can also find me on LinkedIn.
That was it. I did it, and all her stuff come up. That is so true. So we also have her, you guys, on our referral page at tdjequityllc.net. She is one of our main characters that's featured right now. So you all can click there and connect to her as well. So again, I want to thank her and thank you all for listening today. And I look forward to seeing you all on our next Giving Power to the Business Owner webinar series. You all take care. Thank you.
Bye-bye.
We hope you enjoyed this episode of TDJ Equity Funding Insiders Podcast. If you'd like to be a guest or get in touch with us, please visit our website at tdjequityllc.net/podcast or email us at podcast@tdjequityfundinginsiders.net. Until next time, take care.